Right, let's take a look at this. We're looking at an inverted head and shoulders. We'll take a look at the analysis, or some kind of a triangular consolidation of the market top. The market will not give you much more room to run and to drop, to buy into lower levels. We were looking at this. I've been monitoring this over the past week, maybe even more. Remember yesterday, we're expecting that there's a top out formation here, and this is a weekly chart now, and this is delayed, that the market would at least fall to test the lower boundary of this ending diagonal. Well, the market, everyone knows that they're expecting a test of that lower boundary. Now, when we go to the 4-hour chart, you'll find this is not going to happen. It's that simple. So let's take a look. This is the trade management on 4-hour time frame. We don't want to go into the segregation yet. We just want to investigate momentum. So we're at that neckline. We have a very strong neckline here at a level 3. That used to be a level 3, an older level 3. So this is going to become a level 1 now. All right. Why is it promoted to a level 1 or demoted to a level 1? Because it's on strong momentum. You have this momentum. This is today's 4-hour chart. You have this very strong momentum on the 4-hour charts. All right. And if you flash back to November, I believe that was November last year, we were at the same neckline. Of course, you had rejection at overbought and then negative momentum. This time we are having positive momentum on the 1 hour, so we're not going to get rejection at overbought. We have this kind of momentum plot on the 1 hour. Okay, so the momentum picture looks stronger, and this would lead us to believe we're having a double inverted head and shoulder at that neckline. Breakout is imminent. We're moving in this ending diagonal, shown in green dotted lines. All right, and if we take out that neckline, we simply move to the next neckline. Next neckline comes in at 161.9, 161 or 160.98. We're looking at 127.2 and 138.2, at least of the whole projection from 2 to internal level 1. We think this is an ending diagonal, so of course it's going to be a 3-wave swing. There's an A, B, and a C at least before we have any meaningful correction, and that should take us to this neckline. Again, projections of the neckline 160 and 161. They're very neat. There's also 161.9, which is 162, and then 163. We can get any of these levels. The breakout high for the current month of January, 161.26. Okay, tomorrow is going to be again that day when they're going to release GDP in Great Britain. It's not going to look very strong, of course. It is contracting a bit, and therefore we could still expect another correction, maybe to 156.10. This level is a buy. So you're looking, maybe we don't get that deep a correction right now. We're 156.9. If we get to see 156.7, it's a buy. If we get to see 156.17, it's a buy. If you get to see, of course, 156.10, it is also a buy. We accumulate, we take this to breakout high 161, potentially even to see 162. Over here, we're looking at, we would compose a buy as of 157.10. This is the month. This is the current weekly chart. We're looking at the monthly actually. This is the weekly pivot levels. We'd compose as of 157.10 all the way to 156.5. These are what you'd expect to get. The breakout high for the week is just 160. Over here showing 159.73. So let's take a look now at the internals and the overall technical picture. Overall technical picture on the weekly now, we are buying a bounce at overbought higher. We're looking at, we're going to break this decline and takes you 27.2% above the old cycle level. So it should actually take you to 163. You're going to create another hit. 163 even 0.94 is showing here. So we're looking at 163. You're going to create another hit. We're actually buying the neckline. Neckline here comes at 156. Exactly 155.79. We're buying forward market. We're moving into a head. The head situation would always create some kind of an ending diagonal. You're having the same ending diagonal when we moved from wave 4A to 4B. All right, so 4C comes in here and we're having the same pattern, identical. We just increase 27.2% above this. We check the numbers. We're even looking at 164. The momentum, of course, is positive on the daily. And that's why you would expect that on that 4-hour chart, this is going to bounce and not reject at overbought. We're looking to buy now into that consolidation. There's inverted heads and a shoulder. You have these more detailed on that chart. This is now our trade management chart. We were looking to buy as of 156.50 and 157.10. Current market is 156.88. So let's take a look at the projections when we go live. In reality, you would expect to have a double inverted head and the market breaks higher, but it is possible because of tomorrow that when we do projections on the 1 hour, you can get an entry at 156.10. That would be our best entry. Even below that 156.5, you're looking at that 50% between the fluctuation low and the fluctuation low itself for the week. You're looking at this level, 156.10 would buy. Now, if the market falls below that all the way to 155 and 155.7, you're looking at a head, major head and shoulders, and we could clear out our position at the shoulders. So long as you find negative momentum, you may wish just to engage half size, 156.10. Remaining size, when we get to that level, actually, we have levels, internal level 1s here and higher degree level 1s here. We don't really think we're going to get there because sterling is going off on a strong uptrend, but we would need to envision and know how to get out of that position if we're not correct. Of course, if you're not correct, you know that you're doing ahead. We move lower all the way down to 154.7, even 153.8. There's going to be a bounce. There's a neckline right here. On top of either of these level 1s, we get out at the right shoulder. Let's take a look at the real market. All right, so according to this segregation here, market actually just finished the 5 here. Now, you know, this is a 1 and a 2. This is internal 1 and internal 2. Remember, our segregation here is an internal 1 and internal 2. It could be an A, B, C, and a D, and an E, and all kind of complications. So it's possible this is an A and a B, and we're getting a C. It is possible that this is just level 1's ends here. This is your A, yes, and B, and now we're getting that C. So that C is simply going to be at the most is going to be a flat swing. So we're no longer doing shorts. We don't need the internal fibs. Okay, so of course, needless to say, we would go on momentum confirmation. If we get it, we'll take a look at the momentum picture. Just in case we are really having a correction, it's a deeper correction. This is a leg A, this is a leg B. Let's have these. Now looking at leg C. It's going to be 138, 138.2, 100. This is a flat correction. You can all see this is a flat correction. Probably the best we're going to get is 155.6, 155.7. There is that level here, 150. We think it's just going to be 155.6 because you are at the top of a level 1 at that point, internal level 1, if not 156 altogether. All right, so we would move to a 15-minute time frame. You're going to get a lot of choppiness and momentum. We could just leave limit entries at 156.6. Sorry, 155.6. All right, this level here. And then if we get confirmation on momentum, add the remaining of our size, or actually only go full size on a confirmation, on a momentum confirmation. You're looking at a strong 4-hour plot in momentum. You're looking at very small zero line rejection on the daily chart, on the 1-hour chart. And this would lead you to believe you could actually bounce internally here. If that happens, we'll have positive momentum on the 1-hour chart. That's why we're really showing this chart. You could get a bounce at that internal level, 156.32. At that point, you're looking, of course, an A, B, and a C, and there's a 1, 2, there's 3, there's a 4 bounces here, and we break above this inverted head and shoulders. We're looking for the market action to be contained inside of that ending diagonal. So we need an entry at that level, 156.4, 156.5. If we don't want to take risk, we can go on confirmation again. Confirmation would mean that we get positive momentum on, we get back to positive momentum on this 1-hour chart. Of course, by then we're having degree 3 momentum on the 5 minutes at least, or the 15.